Is Adobe a company to buy on the dip? Let's discuss what happened last quarter so that we can make an informed decision. The earnings came out on March the 14th. When the earnings came out, the stock dropped from over $550 to under $500. Why is that? It's because of the lower guidance than expected for the next quarter. And because Adobe did not update their guidance for the full fiscal year 2025. Was the drop justified? No. This software company has very popular programs that everybody uses, like Adobe Acrobat for instance. As well, with the Creative Studio increases in price, revenue is forecasted to go up. Their Photoshop, which everyone knows about, is an industry standard. This is part of their moat. Everyone knows Coca-Cola. Everyone knows McDonald's, Windows and Google Search. Similarly, Adobe Acrobat and Photoshop are household names. Because of the long-time brand recognition and entrenched place in the market, it is easier for most people just to continue with Adobe and their products and services. When we look at their financials, we can see that in the past 5 years, Adobe has met or exceeded their forecasted earnings per share, EPS, for 19 out of 20 quarters. And indeed in the last quarter they did, in fact, meet it again. This is what stock prices are normally based on, their EPS. There are a lot of metrics, but this is one of the most fundamental, along with the price to earnings. As well, revenue has gone up every quarter, for 19 out of the last 20 quarters, so that is something we always look for. Now, the last quarter, there was something that put some of their financials in the red. If you look, for instance, at their net income, it was down drastically. What's the explanation? Well, a while back they tried to acquire a company called Figma. It was a company they thought would benefit Adobe with its design platform. There was an acquisition cost of $20 billion. When a company opens up their books, there is a lot of privileged information that the company gives up access to. For this reason, there is usually a penalty for the potential suitor if the deal does not go through. Because of the concerns from the European Commission and the UK Competition and Markets Authority about the lessening of competition, the deal, in fact, did not go through. Adobe was stuck with the penalty, which was at $1 billion. So, some of their numbers are a bit off because of this one-time charge. Now, back to our original question. Is Adobe a good company to buy on the dip? Before deciding that, we should also decide if this is a good investment in general, what the company does, and its future potential. As mentioned previously, Adobe is obviously well known for Adobe Acrobat and Photoshop. It now has the fast-growing Creative Cloud segment, which it is relying on for more of their recurring subscription revenue. With announced increases in price, revenue is forecasted to go up. Part of a Creative Cloud subscription can be Adobe Illustrator for vector graphics, After Effects for visual effects, Dreamweaver for creating and managing websites, Adobe Stock for royalty-free photos, illustrations, and videos, Adobe Premiere Pro, which is the standard for content generation, and other programs as well. Their content generation competitors are Apple's Final Cut and DaVinci Resolve. There are concerns about competition for Adobe when it comes to generative AI. But what the tech company has going for it is its whole ecosystem. Once you are in an ecosystem, you don't want to use other software to accomplish what is needed. You don't want to open this program, close this, use other programs and waste time learning how each piece of software works. This is also the strategy of many companies like Palo Alto and CrowdStrike for cybersecurity. Microsoft with all their online software integrated together, and with Google and Apple having their own environment as well. That is why competition from OpenAI's Sora, which is said to be capable of generating videos, and others, that have no proven track record, will face an uphill battle with the whole Adobe environment, not just Adobe's equivalent, which is named Firefly. Adobe Firefly integrates advanced generative AI into Adobe's suite of creative tools. Designers and creators can leverage Firefly to automate repetitive tasks, generate novel design elements, and explore creative possibilities. Photos, sound and videos can be generated right in the Adobe environment. For people who are already using Photoshop, After Effects, and their other programs. One of the questions in the earnings conference call regarding Firefly was about its monetization. If you have used any generative AI platform, you know that all companies are experimenting with tokens. and the number of tokens that will be used to generate a photo as opposed to a video and so on. Right now, Adobe has said it will work out the exact pricing in the second half of the year. However, when looking at the website, I see they do have some pricing in place, which can be adapted in the future as necessary. So, we know what the company does, and we see its future potential with its ecosystem and its generative AI. Financially, as mentioned before, the software company met or beat revenue and earnings potential in 19 of the past 20 quarters, which is about as good as it gets. It even met it in the last quarter. The reason for the dip was the overreaction by some reporters to not updating its forecasts for the year. The analysts should keep in mind that once again, the company will at a 95% certainty beat its forecasts. And for the next quarter, they gave a target of $5.25 billion to $5.30 billion of revenue but are expecting $5.13 billion. It's only 2% off, and more than likely, they will still be able to reach their target. It's incredible that the stock tanked more than 10% just for that. The company has announced a $25 billion share buyback. With less outstanding shares, the earnings per share will go up, which will increase the price of the stock. So, the final verdict? I'll tell you, but a disclaimer first. Investing involves risk. This video is for informational purposes only. Consult a financial advisor if you are not sure what to do. With a reasonable forward price to earnings of 28 and double-digit growth forecast, a 12-month stock forecast of $650 seems reasonable. In the near term, I fully expect Adobe stock to recover the 10% it lost within the next 1 to 2 months. And I have bought shares on the dip. So, what will you do?